Good morning. This is Joseph Vassar with the February 2nd, 2026 CattleFax Opening Bell. This week's opening bell is brought to you by AGA, the American Gelbvieh Association. The North had moderate to active Fed cattle cash trade volumes last week, and the South experienced moderate volumes. Northern Fed cattle traded at 238 to 241 live and 375 to 378 dressed. This is $5 higher live and $5 to $8 higher dressed when compared to the previous week's prices. Fed cattle in the South traded at 238 to 240 live, which is $5 higher than the previous week. The live cattle futures market was firmer throughout the week last week, with a higher push on Friday, followed by softer movements before the market closed. Fundamentals remain intact, and estimated packer margins are still in the red. Cash prices are called steady this week, with a slightly firmer bias noted. Shows in the North, Kansas, and Panhandle regions are all smaller this week following decent Fed cattle trade volumes last week. Last week, the spot composite cutout averaged $367 a hundredweight, which is $1 higher on the week. Momentum is beginning to turn lower. Ribs continue a defensive trend, and end meats are beginning to show signs of resistance, with a downward trend expected to begin. The cutout is forecast to be softer this week. The USDA cattle inventory report was published on Friday. The report showed cattle inventories at their lowest numbers since 1951 to mark a new cycle low. Mixed signs of expansion were evident for the breeding herd, with beef replacements and dairy cows slightly higher. Calf crop and feeder cattle supplies were lower, supporting expectations for a lower fed slaughter in 2026. Thanks for watching, and have a great week.